You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey, Internet, welcome to another episode of the Acropolis podcast, New Foundations. We are the Bitcoin Treasury platform for businesses, and joining me today in the studio is Jesse Posner and Erik Cason, the co-founders of Vora, and you can find more at Vora.io, two legendary champions of self-custody, and coming to us from Presidio Bitcoin, it looks like a kind of studio room. How are you doing?
Doing well. Happy to be here.
Excellent. We're doing great on this foggy, traditional San Francisco fall.
Yeah. As you guys know, I am looking out at the same fog you are. We're not that far away from each other. And we've had a chance to grab a kind of an in-person lunch, which I thank you guys for making the time to meet with me to do that. It was great to meet you guys in person. And thanks for joining me in the studio for kind of a deeper dive on some of your thoughts around the company Vora that you guys are building out of Presidio Bitcoin. And we'll get into that, but I do want to start with the debasement trade. This is a term that we've heard it for years in the Bitcoin space, but for whatever reason, TradFi seems to have caught on to it in the last couple of weeks. Maybe it has to do with Bitcoin running up over the last week as well, and folks are starting to see that gold reserves are becoming an increasing kind of percentage of total assets, especially compared to government treasuries. I guess what I wanted to ask is, I'm curious about this word debasement trade, because to some degree, I think we would all look at buying Bitcoin, self-sovereignty, and self-custodying your Bitcoin as not a trade, but as kind of, if anything, the last trade. Do you like this phrase? Is this a fair framing, or do you prefer to call it something else, like the fiat Ponzi unraveling, a Bitcoin gold rush? How do you guys think of like a catchy tagline to describe this moment in time where we're seeing money leave traditional assets and find home in this better, superior store of value?
Yeah, when you first brought it up, the first thing that came up in my mind was, Sailor's tagline of the last trade. And I think that's a great way to look at it, because like a lot of times, like I'll look out into the world and sort of see this playing out, and I'll start feeling my own sort of paranoia, be like, oh God, like I gotta get all my stuff structured in it. And then my brain's like, chill, like you like own Bitcoin, you're like good. And it's pretty amazing to think of like this highly structured finance TradeFi world that all it's really trying to do is actually get to the place where it's avoiding debasement. And that's the beautiful thing about Bitcoin, is that like it really is the last trade. And if you fully grok it, you realize parking your assets there and having a majority of your savings in it is really sort of the most prudent move that can be made. And, both Jesse and I have felt that way for the better part of a decade, because we sort of understood that and chose Bitcoin as our own treasury reserve asset. And it's turned out to be really well for us. And so I'm very enthusiastic about the world sort of hearing the music stop to the musical chairs game. And now it's really people starting to understand that debasement is here. And now the question is how are you going to protect yourself against it?
Yeah. I mean, I think, Bitcoiners have been thinking about debasement for a long time, but I think what is being called the debasement trade is a broader macroeconomic phenomena that's happening right now. That's not just in Bitcoin. So, gold is going crazy. I mean, gold's been outperforming Bitcoin this year, and it's just going parabolic up and to the right, like breaking all-time highs. Silver is pretty close behind it, like I think about to breach all-time highs if it hasn't already. And a lot of the precious metals are performing really well. Palladium, copper. Copper's kind of tied to the AI trade as well, but hard assets in general seem to be performing. The dollar is down substantially on the year. So there's the Bitcoin stuff, doing its thing, working through its patterns, but this what's been going on with hard assets in general and with gold, I think has people wondering what's happening here behind the scenes. Is, even outside of the Bitcoin flows, like what's going on with central banks. I think China's been buying a lot of gold this year. It suggests that something might have broke in the financial plumbing, or that some major players are rethinking their ties not just to the dollar, but fiat in general, which of course validates the Bitcoin hypothesis.
Yeah, and Eric, to your point about people just want to store their value and they don't want to see it, devalue over time, it almost makes you wonder if the debasement trade is people who have been buying the S&P 500 for the last decade. I mean, to some degrees, that's also the debasement trade because they're trying to get out of the depreciating dollar. They know they can't just store their value, their time and energy in the money because the money is leaking value. Whether they think about it or not, they are kind of performing a debasement trade in a way where they're getting out of the debasing dollar. So I'm not sure that the debasement trade correctly sums up this moment in time where we have an emerging store of value asset, the first truly superior fixed supply asset of Bitcoin. So I'm not a huge fan of the terminology because it also does lead more thinking, I think, to gold. And so this is more to your point, Jesse. I like to ask people that come on the podcast whether or not they think gold is going to kind of receive the better appreciation in the coming years when the majority of the normies realize that the debasement trade is on, but they haven't yet learned about Bitcoin. And so they just immediately jump into the first thing that they think is what's going to protect them.
Yeah, what I think is interesting is that we're in a pre-1933 trade environment where gold has all, and hard metals and commodities have all of the appeals that in a environment like this do exude themselves. But to me, the next question is that, so if those precious metals do suck up all of that extra value, do governments respond how they did in the 20th century, where you see central entities going after people who are holding gold directly, gold dealers, banks, and do they seize those? And I think because history has told this tale before, I do think that is a non-zero chance. And so I think as people become more present to that, and if we actually see some central banks take that action, I think that's when we're going to watch the narrative flip in a pretty extreme way, where people will realize that as much as we want gold to be an exit, it turns out that trying to carry $100,000 worth of gold across a border is much more difficult. And it might get to a place where people do need to actually exercise jurisdictional arbitrage to protect themselves. And Bitcoin is much more substantial in how it can deliver around that. So I think that's going to be the big question, is that as this debasement becomes clear for the world to understand, how are governments actually going to respond with heavy hands? And then how will people sort of responsively engage towards that?
Yeah, I mean, I think there's a lot of advantages that Bitcoin has over gold in terms of it being easier to secure and transfer and verify and divide, and you can program it. It's native to the internet, and it's more scarce than gold is. So, I think the one thing gold has over Bitcoin is just the track record. It's proven itself over thousands of years to be able to retain its value. But I think that probably most of the capital in the world right now is boomer capital. And so I think there's a real generational divide where, if the boomers believed that Bitcoin really is this scarce asset that has the same, has even greater scarcity than gold and is completely secure and, all the claims about it. I think if they actually believed that and had conviction about it, then all this capital will be moving into Bitcoin. But I think there's still a lot of skepticism out there. It takes a little bit to, a lot of education, feeling comfortable with technical concepts to really get your head around Bitcoin's scarcity and how that actually works, because it seems impossible at first. It's like, well, why couldn't you just increase the supply? And so you have to go into proof of work and nodes and open source. There's a lot to figure out, and to the boomer brain, that stuff doesn't really come naturally. So for most of those people, they just don't buy into the Bitcoin thesis. And so they are starting to buy into the debasement thesis. I think that's what's becoming clear. But they're going to gold as a way to protect themselves. But I think that's why there's so much great upside in Bitcoin and why we're still early in Bitcoin, because the reality is these claims about Bitcoin are true. These properties of Bitcoin are real. And as more and more people understand that, they're going to see this is a better alternative to gold. And then there's just the natural kind of generational shift that's going to take place, where one day most of the capital in the world will be millennial capital or, Gen Z capital. So I think as that starts to happen, things will move towards Bitcoin away from gold. And also it's really great for Bitcoin that gold goes up, because in many ways people compare Bitcoin to gold in terms of market cap when we're trying to think about, how high can Bitcoin go? And so like one great metric is to say, well, it should be able to get to the same market cap as gold. So if the market cap of gold is increasing substantially, that should, kind of provide an upward lift to the Bitcoin price, because if it's showing that, hey, even just to get to parity, like we've got a long way to go here in terms of Bitcoin upside.
Yeah, you could argue that even if gold is the Schelling point and the boomer capital flees into gold and that market cap increases, that really that's just kind of a waiting period, and that capital is eventually going to find itself into the superior digital form of gold, especially when it comes time for boomers to pass down their wealth to the next generations. I imagine most boomers who are talking to their kids and talking inheritance, the kids are going to prefer to just have some Bitcoin. I've seen this with some of my friends. They're like, no, I don't want to inherit your real estate property and all the maintenance costs and all those headaches. Just put it into Bitcoin and let me hold it. Let me see it on my phone and hold it that way. I'm not sure if you guys would go so far as to say that gold failed. I know many in the Bitcoin community do, and we would argue probably that it's because, like Erik said, it's difficult, costly, and risky to transport gold, especially in large amounts, and that therefore gold naturally centralizes around places like bank vaults where there's kind of established security. We are starting to see bigger and bigger Bitcoin holdings amongst companies like Strategy or ETF providers. But with that said, we did have many years of individuals front running this and really distributing the ownership. And still, I think 65% of Bitcoin is held by individuals. So do you think that kind of individuals front running institutions for the last 15 years or so was enough distribution of the Bitcoin holdings that we have kind of already put to bed that risk of the centralization that we saw with gold?
I think we're in an interesting dance right now, because like it's pretty clear that all of the individuals that front ran this whole operation could see that this was coming down the line. And despite that, Strategy has what, like 600,000 Bitcoin at this point in time?
640,000, yeah.
Yeah, and so that's a huge amount of Bitcoin for one entity to have. I'd feel a lot better if I knew that Strategy was holding it in a way that would allow for them an exit if they were to specifically be 6102. But with that being said, like I think this is always sort of an interplay and a dynamic, and that the price mechanism of Bitcoin sort of balances accordingly. And so I think while there is a risk to it, I also think that as the price continues to accrue more value to it, that people are going to see this play out and realize that Bitcoin's probably going to be a lot better of an exit for them to escape this sort of debasement. And so I think more and more people are going to choose Bitcoin as their chosen asset, which will then, cause for the balance to go down. And then we get this sort of virtual cycle of now that more and more people are holding it, it feels safer for institutions to hold it. So more smaller institutions will continue to hold it, because even at this point in time, you maybe have a few hundred companies that actually have Bitcoin treasuries. And so there's, I think, like 80 million businesses throughout the world or something to that effect. And I think that as businesses realize that this is probably the best place to put their treasury, and they see more people getting into it, they'll balance over into that side. So While it is a concern, I think that as long as we don't allow, like, I think the idea of, like, all governments around the world kind of choosing to make this into their central bank asset at the same time and causing the price to shoot to 2 million overnight, that seems like a greater danger to me than the current paradigm that we're operating through.
Sorry, what's the danger of shooting to 2 million overnight?
Well, I think that that danger would allow for greater centralization of entities like central banks to be able to get their hands in on it while depriving individuals of the ability to see Bitcoin as this asset that'll protect them if they sort of miss out on the Omega candle pumping just overnight.
Yeah, sorry, I guess my point there, though, is if already 65% of Bitcoin holders are individuals and the central banks and governments do run it up to 2 million, it's hard to see how they haven't empowered that 65%.
Yeah, and I think that 65% will be empowered, but I'm speaking specifically about the contingency of people that are still hesitant and haven't actually got on board. So let this be sort of your warning that, like, setting sail is imminent, so you should get on the boat.
Jesse, did you have any thoughts there?
Yeah, I mean, I think I agree, with what Erik said. I think maybe this will be one of the advantages of this whole Bitcoin treasury company craze is that we want there to be not just one MicroStrategy, but like a lot of different corporations that have Bitcoin holdings, which would help decentralize like the large holders of Bitcoin. So, and yeah, I think Erik makes a good point. I mean, as much as I want the price to go up as fast as humanly possible for selfish reasons, I think it's probably better for the world in some ways that it's kind of slow and steady, because that is going to give a greater opportunity for more and more people to get their piece of the pie. Because once we hit escape velocity, the kind of distribution of Bitcoin will be somewhat fixed. I mean, it will move around on the margins, but the window is closing to kind of like get your stake in this system. So yeah, we'll see how that plays out. Another nice thing is like, it's the decentralization of Bitcoin is more than just the holders. So like, the holders of Bitcoin only have so much influence over the Bitcoin system. They can't arbitrarily just decide to change the rules. I think the biggest power that they have is if and when there's another fork, the biggest holders can dump on one side of the fork or the other. So they could kind of significantly affect in the short term the viability of one side of the fork or the other. But even with that, it's like they could create a big crash in the short term. But if let's say there's like a fork and there's KYC Bitcoin and the free true Bitcoin or something, like the underlying properties of the asset have a chance of winning in the long run. And there's a risk that if those big holders dump on the wrong side of the fork, that the train's going to leave without them. So even with that, it's not like they have this massive influence and ability to change the properties of Bitcoin, which is the most important part of the system.
Yeah, and I think most Bitcoiners would find it fairly easy to see us 10xing in price in the near term from where we are today. We've heard calls for $1 million a coin for years now, but I think all of us really do believe that it's not in the too distant future. Yet we see a lot of individuals who are holding their Bitcoin, holding it in ways where they're not treating it like they would treat it if it were 10x the price. So this kind of ties into obviously what you guys are working on, where at Vora you all are taking kind of self-custody, security, privacy to a whole nother level. Why don't you kind of explain what Vora is and what you all hope to offer the market?
Yeah, so Vora is the ultimate solution to self-custody, not just for Bitcoin, but for your entire digital life. So there's a component of that relates to AI. There's a component that relates to your own personal data. But the Bitcoin piece is the primary focus because, we are really thinking about what happens when Bitcoin is $1 million plus and how all the existing self-custody systems are going to fall over. First of all, you have all these hardware wallets that are these like very inexpensive plastic little gadgets that feel more like toys than like serious security devices. You know, the hardware wallet itself is just one piece of the puzzle. Like if you really want a complete self-custody solution, not only do you need a hardware wallet, you need a Bitcoin node, because if you don't have a Bitcoin node, you don't have privacy, because when you query for your UTXOs and when you broadcast transactions, you're telling a third party what Bitcoin you control. And if some third party knows how much Bitcoin you have and your IP address or your home address, then that data can and will leak, and then you become a target for wrench attacks. So you need to have a node to safely do Bitcoin self-custody. You need to have a hardware wallet. And you also need to have a security system, because when we think about hyper-Bitcoinization, we think about Bitcoin $1 million, all of us are going to become targets for wrench attacks, and the wrench attacks are getting worse and worse every year. So you need to have effective deterrence against wrench attacks. And then if you want a home security system, all the ones that you can just buy off the shelf, like ADT, are privacy nightmares, where they use like Google Nest or Amazon Ring, and all that video data gets shipped off to the cloud and is accessible by governments and corporations and all of that. So it's actually pretty difficult right now to do self-custody right. And we at Vora, we're bringing all of these pieces to the puzzle together in a single solution, where you have this premium, beautiful hardware that you put in your home that has both the hardware wallet and the Bitcoin node in a single device, and they're separated over an air gap. But we've got a really amazing air gap mechanism that is way easier than dealing with QR codes or SD cards, where we have 2 one-way data diodes and 2 buttons and LED lights, and we can cut off the line of sight and make it really simple and easy. And we have a monitoring system and a home security system. We have defenses against supply chain attacks. So we're doing self-custody right. We're allowing the price point to rise somewhat, because if you're securing, $100,000 worth of Bitcoin or $1 million worth of Bitcoin, like, your self-custody solution doesn't have to be $100. Like, it can be more expensive, and it should be more expensive, because you wouldn't buy a $100 safe off of Amazon and put $1 million in it. Like, you want the security system to be comparable to the value that you're using to secure with. So, and we're making the most beautiful Bitcoin hardware, because we want this hardware to be really exciting to use. Like right now, when I go to use a Bitcoin hardware wallet, it's annoying. I don't look forward to it. I'm not excited to do it. When I sit down to sign my Bitcoin transactions, I want it to be a celebration of my freedom and my sovereignty. And I want to have badass gear that goes along with it, that feels really nice to interact with, that looks really amazing. So there's this whole aesthetic component that we're working on that doesn't exist right now. And then, all the same technology that we use to secure our Bitcoin. I mean, at the end of the day, Bitcoin is just data. It's just information. It's just keys and ones and zeros. So once we solve how to protect the hardest to protect data, the hardest to protect information in the world, then all other forms of data can be secured by the same system. And that's where we get into the AI piece, where when not only are we thinking 10 years down the road in terms of where is Bitcoin going and what are the problems that are going to come up, but we're also thinking 10 years down the road in terms of where is AI going. Because 10 years from now, everyone's going to have a personal AI that has access to all of their data, their emails, their calendars, every single file on your computer, multiple years of conversations where it's been used as a doctor and a therapist and a lawyer and a friend and all these other things. And that these AIs are going to be assisting us and know us very intimately and are going to be helping us with every single thing that we do every single day. And that is going to require ownership and self-custody of the AI system in the same way we think about for Bitcoin, where that AI has to be open source, where I own the code, I own the hardware, and I control my data, because that archive of personal data that the AI is going to be leveraging to be this incredible assistant is also something that cannot be compromised or lost under any circumstances, because it would be an absolute nightmare for all this extremely private information to get into the wrong hands. So in the same way that we air gap our Bitcoin data, we have to air gap our AI private data as well. And we have to use the same advanced techniques of distributed security and cryptography and defending against supply chain attacks. Like, all of these same considerations need to come into play to secure the AI data. And then the last piece of what we're doing is we're going to have third-party integrations. So when you have other devices in your home, like a baby monitor or a pet camera or anything else that lives in your home and is gathering data and is sending it off to the cloud, we're going to make it really easy for other developers to register their product with your Vora Vault at home, and it will issue keys to that device and give it access to the self-hosted server at home. And now it's really easy for a third-party developer to offer end-to-end encryption in their product. And once we start getting robots in the home and all of this stuff, like, I am not going to have a robot in my home under any circumstance if it's not open source, if it's not totally encrypted with my keys. Like, I want a robot in the home. I don't really like doing dishes and laundry or whatever, but like, it's such a security and privacy nightmare if it doesn't adhere to the Bitcoin ethos. So that's the other thing the Vora Vault's going to do, is it's going to make it really easy for somebody to offer this end-to-end encrypted robot and have, you know, really think of Bitcoin as representing a vision for technology in general, where technology can be in harmony with our humanity and not at the expense of it. And that's ultimately what the Vora vision is about.
I'm envisioning you telling your friends, future AI robot girlfriends, that they have to wait outside because they're not open source.
Yeah, exactly.
So this is a huge idea. It's one that I had only first heard when we were all sitting down at lunch, this idea of kind of a self-custody AI or self-custody data and software applications more broadly. It is a really big idea to wrap your head around. And I know you guys are in the process of fundraising for the business. Two very well-known names in the space, backgrounds at Coinbase, etc. But what has the experience been like? What can you share for other Bitcoiners who want to build businesses on Bitcoin only? What is it like to try to raise capital or try to pitch these big, ambitious ideas that are obviously also to some degree technically complicated to traditional VCs or even Bitcoin VCs?
Yeah, I'd say one of the things that we discovered is that Bitcoin VCs are very focused specifically on the Bitcoin niche and addressing that very directly. And Vora is a wider vision that captures a lot more to it. So we've found, while we've been receptive by Bitcoin VCs, we're finding sort of across the board, people are really receptive. And the interesting thing about Bitcoin is that for anybody starting a business is that it is a hardcore contingency of people that are looking to the future of technology in this way that can really bootstrap your product in a powerful way. And that's one of the reasons that we're addressing sort of the Bitcoin market contingency first, is that everyone that we've talked to that is a whole coiner or more, they're really interested in a product like this because they are afraid of their information being leaked. They don't want their data to have potential to be used against them. And also, a lot of these people are very forward-looking with the ways that they are actively using AI in their daily life. But there's a lot of trepidation about what is happening with that information that they're giving to OpenAI or to xAI or any of these other companies. And so we've heard from a number of people that just the AI piece is what they're interested in. And it was only once we started really doing R&D that we really clicked for us of it was like, if you want your AI to truly be loyal to you, to be able to have your business insights, research, all of your alpha in there, you need to treat it with the same security that you want to be treating your Bitcoin with. And we think more and more people are going to come to that conclusion as well, because as AI gets more powerful too, it's going to get a lot better at being able to chain together all of these different attack surfaces that really makes most modern computers and the way that we're storing data with these centralized services to really not have the level of security that is going to be needed. Because within a year, it's going to be very easy. And I mean, it's even easy right now for people just to vibe hack people to where they just tell the AI, hey, go gather this data, string it together to me in a way and make me a great list of easy to target people in my neighborhood that I can just go to them and be like, hey, I got your Pornhub repo. Do you want your wife to know about this? Because you could just give me money instead. And I think that these privacy concerns are going to become front and center as we see more and more data leaks. And the reason that it hasn't become a priority yet is that there hasn't been a good way for people to leak their therapist's information on the internet. But now that people are treating OpenAI as a therapist, very private conversations are going to get leaked. So if you're going to really be using this technology as intimately as it's directionally going, you're going to need to treat it with the utmost care and security. And Vora wants to deliver on that in a way that's easy for everyone to use so that you can just give your grandma a Vora box and say, Grandma, plug this in. This is your new computer that you're going to use. I'm going to send you some Bitcoin and program up a couple of your agents so that I know that you're well taken care of, and it'll report back to me on how you're doing.
Every business will hold Bitcoin. Some already do. Others are developing a plan. Acropolis is how smart companies take action today. Built on multi-institution custody, Acropolis delivers a turnkey Bitcoin treasury solution designed specifically for businesses. Here's why that matters. Multi-institution custody is the breakthrough that unlocks the corporate adoption of Bitcoin. It eliminates the need for employees to hold cryptographic material and removes reliance on any single custodian. Instead, Bitcoin is secured using a 2 of 3 multi-signature quorum, where each key is held by a separate, regulated institution. No single party can move funds on their own, eliminating single points of failure and greatly reducing risk. We act as an extension of your treasury team, managing institutional-grade custody, insurance, continuity planning, and strategic advisory, so your company can adopt Bitcoin confidently and securely. If your team has been sitting on the sidelines, unsure of how to get started, or worried about getting it wrong, this is your signal. Visit acropolistreasury.com and schedule a consultation. Bitcoin is reshaping corporate finance. Don't get left behind.
I think one thing we've really learned a lot about the Bitcoin startup space, Bitcoin VCs. And, one thing that has been a little bit surprising, but I guess it really shouldn't have been that surprising. But most of these Bitcoin startups, they're not great businesses, and they're either not making money, or if they are, they don't have much growth. And then you have, Bitcoin companies that have been around a while just because they bought a bunch of Bitcoin way back when, and now they're just living off of that Bitcoin, and they can last for a very long time, which is great because, they can keep building out Bitcoin tech and products and don't have to have a large demand immediately to do that. But I think that you have this ecosystem of startups where we've kind of described it as they're all waiting for the Messiah to arrive, which is hyper Bitcoinization, where they don't have a lot of demand now, they don't have a lot of profit now or growth right now. But one day in the future, this Bitcoin wave's going to hit, and then they're all going to be well positioned and they're all going to do really great. But nobody knows how long that's going to take for this one day event to occur. I mean, it will occur, but it could be 10 years from now. It could be 20 years from now. We don't know. And so I think that we really need Bitcoin companies that aren't just these lifestyle businesses where they get to work on Bitcoin stuff and sell to the Bitcoin true believers and get money from the Bitcoin investors and go to conferences and high five each other about Bitcoin stuff. That's basically the Bitcoin startup scene right now. But I think we need to have impact, not just have a social club, but actually drive impact, hit the mass market, change things, grow into giant companies. And that's what we're about at Vora. We're not here to just be some niche Bitcoin business. We're building a gigantic business that's going to pull in the mainstream. And so that's what I would say to any, new Bitcoin entrepreneur or Bitcoin investor or somebody thinking about a startup. Think big, think more ambitious, and think about how to get to the market before the Messiah arrives. What can we do right now that can find product market fit?
Yeah, it's a great point. And obviously at Acropolis, we deal with companies who, to some degree, are looking to buy that Bitcoin stack at today's prices to provide them that infinite runway, where hopefully, yeah, they have more time to provide value to the market, iterate on product market fit. But you kind of said the Messiah thing. They're waiting for a kind of hyper Bitcoinization. And then immediately after, no pun intended, you said they're waiting for profit. And I was just thinking, they're literally waiting for the profit. Turning to the security aspect a little bit more, time locks is this thing that's gotten a healthy amount of conversation in the Bitcoin community as of late. I've been thinking more and more about how do time locks come into play here? What is the winning use case for time locks? So let me maybe pitch a scenario to you. And is this how you see the use case for time locks, or am I way off? So time locks in practice would maybe be something where an individual who's self-custodying their Bitcoin creates a 4-hour window once a month that only they know what that 4-hour window is, where they can regain access to the Bitcoin. And maybe for that 4-hour window, they are taking their security very, very seriously. And if they have to do any transaction over the month, they have to make sure that they're ready to do it in that 4-hour window, because they themselves don't even have access to the Bitcoin outside of that. And so they can take additional security expense and even have a bodyguard nearby, or go into a bank grade vault with their laptop, because they know that they're only taking that high level of security cost for a 4-hour period. Is that a use case? Is that a realistic use case, or is there something way better that you guys are thinking through?
Well, I think it's, in theory, that sounds good. And, in general, the devil's in the details. Time locks are hugely important. Like a lot of these technologies, whether it's, time locks or mini-script or trusted execution environments, they're these important technologies, but the problem is people will just think that the technology alone is going to solve the problem without figuring out how to integrate it into a system where that specific technology is being used, optimized for its purpose. So, I want the system you're describing, which is, I can only send the Bitcoin within this window, and then I can make sure I'm in a secure environment when I do it. What I worry about with something like that is, well, how do we implement it? Because if all we do is have, let's say, a blockchain-based time lock or time delay, if somebody seizes the whole system, if somebody takes the keys, then that attacker can wait for the time delay window to send the transaction. Or so you need a time delay, but you have to think about what happens when the time delay expires? What if the attacker accesses the keys before then? How is that going to protect you? So with Vora, we have two different types of time delays. One, we have a 2 of 2 between the Vora vault and our server. And our server enforces a time delay. Basically, you have 2 buckets of coins in a bucket where there's no time delay, coins in a bucket where there is a time delay. If you take coins out of the time delayed bucket, the server will not sign for those UTXOs until the time delay elapses, and then they move into the other bucket where they can be spent at any time. And we use chain code delegation, blind signatures, and zero-knowledge proofs, so the server can actually enforce those time delays without learning what the UTXOs are or any of the wallet balances or any of that private information. And what's really nice about that is that you don't have to refresh your UTXOs to reset the time lock because the server's imposing the delay. Now, if an attacker comes and takes the entire system, then the attacker can ride out the time delay and spend the coins. So what the time delay there is doing is buying time for the countermeasures to kick in. So by creating a time delay, we're raising the cost of the attack because now the attacker can't just move the funds right away. They have to take hardware and send stuff later. So it kind of marginally makes the attack more complicated. We have now time for law enforcement or private security to respond and to either get to your home, or if you're being kidnapped, to find you, because this time period is creating friction in the process that can give a window of opportunity for an intervention to occur. And then we have our other countermeasures, which are, if the attacker takes everything in your home, your Vora vault, they take your cloud, they take your phone, they take all your passwords, they take everything. You have your recovery kit in safe deposit boxes. And that recovery kit, you can use a memorized PIN, which we have brute force resistance for, or your phone to broadcast a pre-signed transaction. And that pre-signed transaction will move the coins out of the hands of the attacker. So while the attacker is waiting on the server to enforce their policy time delay, you as the user can go and broadcast this pre-signed transaction and move the coins. And now the hardware that the attacker has seized is no longer useful to them. And then in the pre-signed transaction, we have a time lock. And that is blockchain based. But because it's tied to a pre-signed transaction, the time clock doesn't start elapsing until the transaction is broadcast. So you don't have to continuously be refreshing these time locks. They only trigger when the event occurs. And you have other keys that you can use to claw back the funds. If the attacker isn't the person taking the hardware, if the attacker is somebody trying to broadcast the pre-signed transaction. So you have to think very carefully about the attack scenarios, how time is going to be used, what the countermeasures are, where things can go wrong. And if you optimize that with the right patterns, they can be very powerful. But there's also a lot of ways to use time locks that won't actually be useful in certain attacks if it's not done in the right way.
I think we would agree from first principles that Bitcoin presents a security technology that could keep anybody from ever getting your Bitcoin. I guess maybe taking it in a slightly different direction, and I think about this quite often, what would I do if an attacker came into my home and had me and my wife at gunpoint and said, no, I'm not leaving without something? You're dealing with a desperate individual who's clearly already taken steps to break the law and, commit, even just putting us at gunpoint, commit some level of violence already. I often ask myself, well, should I have a hot wallet ready with some minimal amount of Bitcoin that I'm willing to, say goodbye to say goodbye to the attacker as well, and to make sure that they leave peacefully? But I'm also wondering if maybe it's something you haven't thought about yet, but this idea of maybe an escrow or a smart contract where, hey, attacker, I can show you that, and maybe this is too complicated a conversation to have with somebody who's got you at gunpoint and maybe doesn't even understand Bitcoin's, native technology. But hey, attacker, here's this smart contract. This Bitcoin will be unlocked to you if it's shown or proven a week from now that my wife and I are not in hospital, dead, or on the news kidnapped, or some type of an escrow where it's like, you're going to get your Bitcoin, but you only get it if you leave peacefully. If you escalate this to violence, if any of us gets hurt, you don't get that Bitcoin. So I don't know, I keep thinking about this idea that yes, we can keep anybody from getting the Bitcoin that's stored in our head or through these really, technically sound vaults. But when you're dealing face to face with the attacker, it's very hard to imagine that you're going to get them to leave peacefully just because you say, oh, sorry, I don't actually have access to the coins.
Yeah, I mean, this is where the meme of the $5 wrench attack actually comes from, is the XKCD comic where he's like, oh, you don't understand, it's all encrypted. And they're like, what? Just beat him with a $5 wrench till you get it. I think that this is a very personal question that each person needs to ask themselves. Like, how much money do you want to be willing to part with in order to try to make sure that those people leave peacefully? And the sad truth is, the moment that they enter into your home, they've decided to engage in violence to try to extract them. And I think that these are people that we shouldn't welcome in our society at all, and also let them know that they are going to be punished for it. And so at Vora, we've designed a number of different systems that, while you can give the people the money, that like these transactions can be tainted, they can be clawed back. We're eventually going to have drone surveillance services. And what we really want is for there to be a future where essentially they're going to go to kick your door in, and they're going to see the little Vora logo, and they'll go like, hang on, like we're going to have a real nightmare on our hands here if we choose to take on this. Let's go for the crypto guy down the street who is flashing his ledger on the chain, because that'll be easier to go past. But this really does just talk to operational security, and that people need to be thoughtful with that. And the other is, like, I'm a huge proponent of owning firearms, and that's one of the great things about being in America, is that if somebody invades your home and is choosing to bring violence to you, you should be able to respond in kind. And so I think that is an important predication that people need to be aware of. But these are really difficult conversations to have, because they are scary, and it does bring up a lot of the concerns and worries that many Bitcoiners do have. And that's another one of the goals of Vora, is that, like, we really want to make a company that you can rely on to be your personal security, that is going to have your back and is going to make sure that we don't lose your Bitcoin because you've trusted to store it in a Vora vault, and you'll know and understand all of the security protocols that we've put down.
Yeah. There's the carrot and the stick, and I think having some Bitcoin available is definitely important to be able to satisfy the attacker with. I think it's a really cool idea if we could do that kind of escrow to say, like, as long as I'm safe, you'll get more Bitcoin. I think the tricky thing there is, how does the attacker get assurance about the escrow agent? Because as soon as you're safe, you could just turn around to the escrow agent and say, like, do not release the funds, or try to legally prevent them, so we need some kind of really reliable method. Maybe there's some sort of, like, system of anonymous, decentralized escrow where it can't be shut down, it can't be inhibited, and it's super reliable. And then that kind of thing could work. And then there's the inverse version, the stick version, which is, if something happens to me, I've already funded the people who are going to take you out. Right? That's the other kind of smart contract, is, yeah, you can kidnap me or hurt me or whatever, but if the dead man switch goes off, these funds get dispersed and they're going to come in and get you. So, and I think in the long run, deterrence is what is going to prevent these attacks from happening to begin with, because that's the ideal. Like, even if we have some way of protecting ourselves and our Bitcoin, like, we don't want the attacker to show up, period. We don't want to be in that situation. We don't want to have to use these countermeasures. And so by really establishing credible deterrence, where we do have these systems that are going to hunt down the perpetrators and punish them, then we're going to need a few examples of this to take place that are very publicly known. But once that starts to occur, and once the wrench attack headlines shift from, hey, this person got kidnapped and somebody stole their Bitcoin, to this person tried to kidnap this Bitcoiner and now they're in jail or worse, and those are the headlines every single time this happens, now the people who do this stuff are going to go after someone else, and they're not going to mess with our community. So that's sort of our long-term strategy for Bitcoin physical safety.
Yeah, it's a really scary thing, though, right? Because we're talking at the start of the call about how very few people really understand Bitcoin, understand that it is this digital bearer asset, and understand that it's going to $1 million a coin and higher. And I just feel like the timeline is that when we do get to $1 million a coin, more people are going to understand that it is a digital bearer asset, including criminals, and that it's just going to make public-facing Bitcoiners like ourselves a hotbed for these issues. Because obviously you all tout with Vora security plus privacy, but to some degree we need to have incredibly strong security, because we've already given up our privacy to some degree. Yes, you can operate the node to have more privacy into the actual amount of Bitcoin holdings. But at the end of the day, it's very clear. You're sitting there with a big, bright, Bitcoin sign behind you. You're at a findable place at Presidio Bitcoin right now. We are findable in the real world. We are clearly holders of some amount of Bitcoin. That makes us quite the likely attack vector. I thought it was really interesting that you mentioned this dead man switch, where an amount of Bitcoin could actually be released to call it the security team or the bounty hunters or whoever it is that you're actually financing to help track you down and bring you home safely. I don't think we'd talked about that. Is that something that you guys have thought out more? Is that would just be maybe a third-party security team that you all aren't necessarily building yourselves, but that you just kind of are creating the smart contract with?
Yeah, we're kind of early on in thinking that through, but that's an idea that we're developing. And an early version of this is we might just as a company put these bounties out ourselves. You know, if somebody comes after our customer, you know, we're going to make sure that the people who do that are caught and punished, potentially with our own Bitcoin. But I think over time, there's a lot of ways that we can implement this so that the customer's Bitcoin can automatically fund these things. And then, you know, I think the other possibility that we've discussed is thinking about drones, thinking about what is the future of personal safety. You know, probably the future of personal safety is going to make the kind of guns and weapons and systems have today seem like the musket or something. Everything that people are using today to defend themselves is going to be super rudimentary compared to the drones and the robots and AI and all these other systems. So I think what we need to do is, as the price of Bitcoin goes up and now Bitcoiners have more capital to invest in physical safety, and at the same time, the technology of physical safety is being revolutionized, that we're, as a company, going to be on the cutting edge of leveraging this technology to protect Bitcoiners. You had a really nice idea, Chase, that we discussed, which is to have kind of not just home drone coverage, but regional drone coverage. So let's say, you know, we start with in the major metropolitan areas where even if you're out and about, we detect that you're under duress or you got kidnapped, and the drones come and find you and follow you and make sure that, you know, the criminals are going to get scared away, or if they're not, that everybody knows where you are and where to rescue you and all of that. So I think that's kind of the way this is going to go, where in the future, yeah, we'll all be known as these like super wealthy early Bitcoin people, and everybody will know who we are and everybody will know we have a lot of Bitcoin, but they'll also know that we have the most high-tech, most effective physical security systems defending us at all times. And that is going to make it so that we're the last people in the world that these criminals want to target, because it's just going to be a certain failure for them. But that's going to be a gradual process. You know, those really advanced physical security systems aren't going to be part of the Vora MVP. That's something that we're going to grow into over time. Unless, of course, you know, hyper-Bitcoinization happens much more quickly than we anticipate, and then we'll be reallocating capital to accelerate those efforts.
Yeah, however fast hyper-Bitcoinization happens will affect your own Bitcoin treasury and therefore provide you the funds to pursue these other product lines and services. So that kind of will speak for itself. It'll determine the timeline for you. So maybe final question for you all here is just, what is next for Vora? What are you actually working on in the next couple months? What are you trying to achieve? You know, when the next time we talk, what's going to be the update?
Well, we are forming our team right now. And so in particular, we're looking for a firmware engineer and an electrical engineer. So anybody out there that's inspired by the Vora mission or knows somebody else who might be interested in that, please reach out. On our website, Vora.io, we've got our email address, our NPub, our PGP key. So it's really easy to get in touch with us. And we're looking to recruit the best and the brightest. We're always interested in hiring security folks. And so we're building out that team right now. In the meantime, we're putting the hardware design together. We're writing code. We're building software. We're working towards getting to a prototype within 12 months. And so that is, you know, that's where we're just hard at work, pushing that forward every day. And we're also starting to think about and build and develop new techniques for the AI part of the system, both in terms of what can we do, like once you can safely give your AI access to this personal data, what are the really cool things that the AI can do for you? And, you know, for example, I really want a system where when I wake up in the morning, my personal AI tells me, hey, you've got a podcast coming up with Chase. You know, here's some questions you might get asked and some ways you can answer it. Or you've got this meeting in the afternoon with, you're trying to recruit somebody or an investor, like here's an agenda. I've already, prepared it. Because I think right now, the way we use AI is we come to the AI with a question. The future of AI is that AI already knows what the question should be before we even thought to ask it. Because it already knows everything we're thinking about, our calendar, all the things we're working on. So why should I even have to ask the AI the question? It should just come to me with the answer before I've even asked it. So we're trying to think about what are the cool things we can do there. And then we have to invent a completely new form of cold storage for AI. Because with the Bitcoin keys, you can have this pure cold system that you have to be, physically present to access those keys. With AI data, like you want your AI to continuously have access to the data and without you being physically present to be able to interact with it and to get push these insights. But also you don't want that data to be vulnerable to a remote attack. So you want the isolation of cold storage, but with better accessibility. And there's more sophisticated forms of air gaps, including air gaps that have timers or can be remotely activated in different ways. And so, or multiple kind of levels of air gaps where there's like a deep cold storage, there's like intermediate and, kind of like an airlock between these like two different systems. So that's some of the R&D that we're doing right now. So, the next 2 months is like recruiting, more R&D, more building, that kind of thing.
Cool. Why don't you give listeners, especially the folks that might be interested in working with you, where they can go to reach out, and then, of course, where people can follow both of you.
Yeah, so Vora.io has all of our contact info. Erik and I are on X and on Nostr. We work out of Presidio Bitcoin. Feel free to come by and say hi. Anything else?
Leave your wrench at home.
Yeah.
Yeah, for the most part, we're building this company because this is a mission that we really believe in, that Bitcoiners need, that can make a better future. I think that everyone that's involved in Bitcoin should really ask themselves, what do you really want to build that matters in the world? And so if your mission aligns with us at Vora, we'd love to speak with you and have you come in and tell us what you can contribute to the mission, because yeah, like we said, we want to make this into a huge company that can really address these needs for the future and make it a brighter one where we have a much greater relationship with technology as a humanistic component rather than something that alienates us.
Yeah, it's a beautiful mission, and two folks in the two co-founders, Jesse and Erik here, that are just kind of spewing with mission-driven alignment in the Bitcoin space. And it's actually amazing that nobody has built this company yet, because obviously self-custody has been the focus in the Bitcoin community for the last 15 years, but nobody's really built that top-down, incredible self-custody in a box solution. So we'll be following along at Acropolis, and I hope our listeners follow along as well. And Jesse and Erik, thanks so much for the time today.
Cool. Thank you so much. Be well, Chase.
Yeah, thank you, Chase.
Thanks for listening to this week's episode of the show. Don't forget to like, follow, subscribe, or leave a rating on your preferred podcast platform. One of the missions of Acropolis is to educate the public on the transformational benefits of Bitcoin and Bitcoin treasuries for companies. The more engagement we get, the more efficiently we can spread this message. Lastly, quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Companies interested in Acropolis can go to acropolistreasury.com to get in touch with our team.